Okay, welcome back to unit number 15, trade strategies using TPO and volume profile in the Traded with Market and Volume Profile course. So for this chapter, we're going to be talking about trend following, low volume node, or ledge retests. So this is one of my favorite strategies that I use, even just with pure volume profile. And what do we mean by this strategy? Well, if we go here, let me just bring up a chart and let me just move this to get a blank screen. So right here, what we're talking about is when we have trending markets, meaning making higher highs or higher lows, if we apply a TPO or a volume profile into this, we're going to notice that this areas right here, we're going to have high volume nodes right around the areas where we accumulate the most volume, usually within these areas. And then we're going to have low volume node areas right around this pullback zones. So when we're trading this, what I am looking for the most is pullbacks. If we are in an uptrend, as in this example, then I'm going to looking to get on pullbacks into the bottom of high volume nodes. This because this is areas of strong support. And so if we're expecting in this case higher lows, then we want to be getting long at this area. And sometimes, let me just clear this up here. Sometimes we'll get something more like this, because remember, this is going to take some volume and time to develop. Maybe we're going to have something like this. We come several times into this level, and then we finally have our breakout, sort of something like this. So in these areas, this might take some time for us to clearly see this high volume node formed, but once we're right around this point here, we have a clear edge at the bottom here, a ledge on this high volume node. And so this is when we want to be taking trades in order to get long. Okay, now there is a possibility, obviously, we could break below this, in which case then if we have something like this, then it would be the opposite. We would be now breaking market structure to the downside. So then I'll be looking to get short on retest of this broken support. We expect now this to turn to resistance, and I'll be looking to get short on the top edges of high volume nodes. So this will be the same situation here. If we're in a downtrend and we have here a profile, high volume profile, a high volume node like this. Let me draw this better. Like, let's say we have this and we have a high volume node form here. Then we want to be getting short on pullbacks into the top edge of this high volume node, because then also this helps us to define our risk very well, as we're going to place our stops just beyond the low volume node area. So for example here, if we're going to get long on this pullbacks, then our stop loss would go just beyond this low volume node protection that we have right over here. Pretty much, right there below the low from this high volume node. Just beyond that low volume node protection, we can put our stops there. So let's go back into the presentation, and then let's look at a few examples that we have here. So this is in the S&P 500 market. This is a 30-minute chart, and you can see we have each one of these sections is one trading day. This one that's shaded a little bit different, this is Mondays, which I have an indicator just to distinguish Mondays. So it's very easy to see when the week starts. But you can see during this whole move up, we've applied this volume profile. So we have some very clearly defined high volume node levels right over here. So if we look at this from a market profile perspective, this is what we will be looking at. You notice right here, we have very clear support levels right over here, which we can identify over here as well. We have this support levels that we are looking on this chart. And then you can see how if we apply a composite into this, right here, I applied a composite pretty much from here all the way into here. We made a composite of this to have a very clear picture of this lows that we have right here. And then you can see how we have the composite with a very prominent high volume node right here. And then we have on this extended hour session, we open right around the point of control of the composite. We broke below this low right here. So we shift market structure, and then we have a pullback and then a test of this broken support now turned into resistance. Okay. So if we go back into the first chart right here, you can see that in this case, we had this lows right here. We clearly broke them. And then we have a very clear retest right over here. And if we look at the high volume node that we had here, we broke outside of this node from above. We broke market structure down, and then we have a pullback into the top of this high volume node into this low volume node resistance, and then we had a transition right into the bottom area of this node here. Now we're going to see in the next chapter about false breaks and reclaims. So if we would have done this and then we do something like this and we hold this again as support, this would have been a false breakdown, and then we could target then, this equal highs right here, these cuts in volumes right over here, etc. Okay, but for now we're just looking at trend following movements. So clearly you can see how once we broke this lows here, market shift changed, and then we look for ledges or edges in order to get, in this case, in with the direction of the move, just like we had over here that we showed. Okay, then if we look at another example, this is in the gold market. I've highlighted this area 1, 2, 3, 4, 5, 6, 7 trading days that we're going to make a composite out of. And then if we see right here, we have this 7-day composite right over here. And then we have our valley area high, low, point of control. So I have this 68% valley area for this TPO composite. And what I like to do is I like to take the rectangle tool and I'd like to put just a whole rectangle in a different color. So I identify this entire valley area, and then I'll be looking for a acceptance back in and continuation into this valley area. If we're going to now, as you can see, we're clearly now coming up in an uptrend. So we're expecting higher highs and lows. And so how can we get in now that we've identified this valley area? And how do we use the ledges of this? So then right here, you can see if I zoom in on this area for this specific day, you can see for this day, we did come into the valley area, but then we closed back below. But then the next day we come in here, we're holding this edge of this ledge here on this TPO. We keep pushing up, and then right here you can see that we accept back inside, come back, retest, and then we reclaim back into the valley area. So then we have what we have here. We're pushing in, we're holding a retest of the bottom area, and we're expecting continuation into the upside. If we see this on a 30-minute candlestick chart, this is the day that I said that we did come in, but we actually just put in a double top and we closed back down into these levels. But then the next day we again push up, and you can see this area right here is still, oh, this is too big. Let me make this thinner. You can see we still experience some resistance in the beginning at this double top area from the day before. This was on a Monday. Tuesday we come back, but now we pull back, and now look how for 3 consecutive hours we're printing this large wicks at the bottom, and we're holding within this valley area that is shaded in blue. And then eventually we have our breakout, and we have a very nice consolidation once we break above this resistance, and we're accepting within this valley area that we had built up from the composite. If we go into an even lower time frame, which again, TPO charts and volume profile, I use this all as like confluence, but I'm checking like lower time frame charts. I have a higher trend context in mind that I take out from like the daily chart, the hourly chart, etc. And if we look at the microstructure here and also the time of day, this happened right around 3 a.m. London. We had the breakout, and then right at the London Open, we had the pullback, retest of this broken resistance, now turns support. We shifted market structure. We're making higher highs, higher lows. And then we can see here how we're accepting into the valley area, and then we have our breakout from that resistance and continuation. Okay, so we can see how through the context of the ledge and this valley area, we look for the edges or the low volume node support resistance areas. In this case, to get retest, we have a context of a significant time of day, such as the London Open. And then we had the continuation off of the bottom ledge of this valley area that we have right here. This is another example here. Okay, and this one we have it in the S&P 500 market. Here we have a chart that spans several weeks, about 4 weeks of action. And you can see how I've applied a volume profile from this point up into this point. Okay, the reason I do that is because I want to show you, if you look at this just as back testing and you apply a volume profile for this whole thing, then the high volume nodes are going to look very clear, but it's very key to try to look at this from the point of if you were trading this live when the market was open. So when we were coming down on this very quick pullback and we applied the volume profile up to here, this is what it will look like. And you can see we have some, small high volume nodes here. But then we have this pretty significant one. We do have this cuts in the middle. As you can see, we had some resistance and some supports, but we have very clear low volume node edges on the sides. We had resistance, 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 support, support, and now we're coming back down into this area. Our trend is still up. We have been making higher highs, And I would say until we break below probably this area of this point of control, or even this one, our market structure is still overall bullish. You could even take, a Fibonacci from here to here and measure. This looks like it's probably right between 50% and 6180. But you can see right here, our main focus is this high volume node that I've marked. And you can see right here how we come, test this low volume node area, this ledge, and then we find support, and then we have a very nice bounce right over here. This is another example on the NASDAQ market intraday, and this one you can see we had this regular trading hours. We left this really significant and clear high volume node where we found a lot of resistance, a lot of support towards the end of the session. And then here during the extended trading hours, we had this slow chugging up, and then we had this quick move down. And you can see how we found very significant support right around this low volume node ledge over here, and then a push up in the direction of the overall trend. Here we have another example in the the S&P market, very similar to the last one we saw. Again, very clear high volume node marked here. Overall market structure is to the upside on this lower time frames. We had an open on the evening. We had one bounce here. We come back down again, and until proven otherwise, we expect support right around this bottom areas of the high volume node. So around this low volume node cuts in volumes, we expect support until proven otherwise. How will we expect to be proven otherwise? Well, if we have the move down, and you can see here, actually, we do have like a single sprint right here. We had a gap that had not been filled here. So this would have been the very clear target to the downside if we would have broken down below this. But until we have a clear close through this, then we can expect some kind of bearish retest, and then we would have a clear target right here. But again, these are very important areas of support and resistance, and I would not recommend that you try to preempt a breakdown until we actually have a clear, you have a solid candle close through these areas. Because, and this has happened to me many times before, you start trying to short right down here thinking this has to go down at least into this level, only to get it all absorbed and then have it rip the other way. And again, this is where order flow analysis comes into play, where we can look at a footprint chart and then also try to spot absorption from selling absorption right into here. And then that could be a possible sign that, the shorts are on the wrong and this is going to bounce back. This is the same example, looking at it from a TPO chart perspective. You can see we have the significant high volume node here. This is the singles target that I was talking about. And you can see how we came down here. We made the first test of the low. Then we went away, and many hours later, we came back down again to test this ledge of this TPO chart into this cuts in volumes, this low volume node areas. And then again, we just bounced from there. Okay, So that's pretty much the examples for this strategy. So again, the trend following low volume node and ledge retests. This is one of my favorite strategies, not just for intraday trading. I even use this in swing trading as well. If I'm looking at higher time frame charts, you can apply a volume profile into an hourly, 4-hour, daily chart and apply this concept as well. So again, the general rule of thumb, when we are in uptrends, we want to be looking to get long on pullbacks into the bottom edges of high volume nodes. And when we're in downtrends, we want to look to get short on retest on the top edges of high volume nodes. And then as far as the stop loss, well, if we just go back here to these examples, like right here on the NQ where we tested this, I would keep my stop loss probably just beyond the valley area low here. You can see there's some cuts in volumes here and here to protect us. So that will be a good area as far as to put your protection right around these levels here. Obviously, you want to look for a good risk-reward trades. In this case, first target would have been back into the point of control of this. So, this was about a 2-to-1 trade. So those are, decent odds on that. Or you could have been a little more aggressive and probably put it just beyond this low volume nodes here. So maybe somewhere around here, etc. You can manage your trade as well. As soon as it starts going your way, you can start tightening your stops and everything here. With the ES example, I would put my stop loss just beyond this singles fill here, just beyond this gap fill. So probably right around there, same thing, and you would be targeting the top edge in this example of this high volume node that we've made in the extended trading hour session, for example, etc. Okay? So that's it for this unit. I'll see you all in the next chapter.